Welcome back to my morning report chart analysis videos on Thursday 13th of October with me, Richard Permarket, Alistair at Hantec Markets. Going to be looking at the FX trade of the year instruments now. We've got sterling dollar, Kiwi dollar, euro sterling, euro Aussie, dollar rand, FTSE 100, WTI oil and cocoa. So let's get into this. Right, FTSE 100, sterling dollar falling away. We had that negative sort of trend just starting to be tested yesterday, but again fell over at the resistance 23.30, which I'll show you in a sec. But that negative candle, it's just basically suggests that rallies are still a chance to sell. You'd still be looking out for any rebounds to be sold into. Now you see here on the hourly chart, 23.30 has been a bit of a barrier for the last couple of days. Again, that held yesterday and then fell away, sort of drifting lower really, rather than any significant selling pressure at the moment. But you'd still be looking at any sort of rallies, I think, as a chance to sell. You've got 22.60 as an sort of late intraday resistance coming in yesterday, but that was below 23.30, and I think anything below 23.30 is a sell. I think we're going to get a retest of this low 20.86. Beyond that, 20 big figure really is the target. Now, Kiwi dollar. Kiwi dollar continues to fall away. Let me show you the daily chart. Negative outlook on the daily chart, coming back towards this key support, I think, of 69.50. Sequence of bear candles. Yesterday's attempted recovery sort of fell away. You've got negative momentum. Look at the stochastics, very negative. RSI negative with downside potential still above 30. I'd say any rallies are a chance to sell. You've got initial resistance 70.90, maybe 71.05 area. But to be honest, I think you're looking pretty much to the downside. Sorry, there it is, 71.05. Pretty much to use any sort of rallies as a chance to sell. It seems as though 650 odd, 55 is a selling opportunity on the RSI. Euro sterling started to drift higher again after a bit of corrective move yesterday. Again, that sort of found support, a bit like cable really, found support 89.60, started to drift higher. I think it's going to retest the 91.40 level, which was the high from Wednesday. But it certainly looks as though the sort of any corrections are being bought into, and it's pushing higher. Euro Aussie. The resistance came in yesterday at 46.65. Now, this is interesting because it is, I think, shown better on the daily chart, this one. The sort of negative move that we've seen yesterday, sort of third real bearish candle in a row, really. Little rallies are being sold into, momentum indicators on the daily chart, all corrective. I think it's going to sort of suggest further pressure back on these lows, really. The recent low, 45.25 area, I think that protects a sort of drop back towards 44.15. But certainly the hourly chart would suggest, I think, selling into strength. Falling over, you've got a resistance band that sort of comes in now, 46.30 up towards 46.80. 46.80 was a bit of an old support turned into resistance, so 46.80 is the ceiling really, and I think selling pressure is still high. Now dollar rand dipped back yesterday, held the support of the breakout, and it started to move higher again. I think look at that, interesting. Old resistance becomes new support on the little corrective move yesterday, rallied, and it's still continuing higher. I think we're going to get a retest of this 14 and 49 resistance, but ultimately, as I can show you on the daily chart, that doesn't seem to be the resistance that's going to hold. I think 14.58 is possible, and also 14.74. So further gains, I think, in this chart. Certainly looking at the momentum indicators on the daily chart. Anyway, FTSE 100 is in correction mode. It's now dropped below 7,000, which is the initial support. 7,000 was the initial support, and it's broken below that today. Interesting that 6,955 was this big breakout level, big resistance breakout, and that has become a basis of support. So 6,955 is a key support. And if you lose that, I think you could continue the corrective move. But at the moment, it is holding, and it looks fairly positive. Fairly positive still, despite the fact that we've lost 7,000. So we need, if 7,000 is retained on a closing basis, then you'd say that that would be possibly just a minor correction. But I think if you close below 7,000, that would complete this sort of double top area. You'd sort of measure, I suppose, 120, 130 ticks of top pattern, and project that downwards. Obviously, that gives you 6880 as your downside target, if that were to be the case, if we saw a closing low below 7,000. So that is the key level I'm looking at today. It's basically bang on 7,000 now. WTI looked corrective and is corrective, increasingly actually, but it hasn't yet broken the key support 4915. That is the key level I'm looking out for. The sort of rolling over, trading below all the moving averages, momentum back towards sort of negative areas. I think that would suggest that 50 big figure is a level, and again that's back to where we're trading now. That was an old sort of breakout and obviously psychological level. It's been a bit of a pivot line really in the last week or so. So 50 big figure is your pivot. I think if you sort of trade below 50 big figure, that could put pressure back on 49.15. I think the big caveat to that is the EIA oil inventories today. Recently we've had loads of drawdowns, so that would suggest we're still positive potentially in the mindset. CCC1 for cocoa. Rallies are a chance to sell again yesterday, falling over 26.88 underneath the 27.08 resistance. Again, it looks like pressure on the momentum indicators and negatively configured. Downside potential still, I think, in the RSI and the MACD lines. Stochastics all looking negative, so use any sort of rallies as a chance to sell. It certainly looks negative. So I wish you good luck in your trading on all your FX Trade of the Year pairs, and I will speak to you again later. Thank you.